You might be having a properties in your name. Let's say you've got a rental properties in your name, generating rentals, good, and making money. Some of us make a decision to say, listen, I actually want to build a let's say affordability, track record, financials, all those things. Therefore, I'm moving the rentals into the company. From tax point of view, there's already a red flag. I'm not here to talk about the tax. Maybe let's park it. I'm here to talk about financial affordability. Now you go to the bank, you want to apply for further properties. You then tell the bank, you say, listen, I'm actually also generating rental income. Here's assets. Here's the assets, the money is going into this particular bank account, which is under the name of the company. And then the bank says, where the lease agreement? Lease agreement are between the tenants and the company. Would you agree with me that banks won't consider that as part of the affordability because it's not coming into your pocket? It's not. So guys, don't make things like that, decisions like that, because it could disadvantages you in raising any further finances so that you end up not being able to buy even more properties. Those are mistakes that we easily make, most of us. Even if I were to talk about tax implications, like I said before, the income should follow the owner of the assets. That is a default position. So in this case, you're even creating administrative burden in a sense that from tax point of view, you're the one who should be taxed on that rentals, not the company. The company doesn't have right because it doesn't own assets. You understand? So the default position is that you'll be the one being taxed. So you're just two things, you are complicating your life. You're complicating your life in terms of affordability in the eyes of the banks because you're not getting cash flow in your personal bank account on the assets you own. On top of that, you're shifting this income that you're supposed to be getting because you don't have any form of relation. It's not like the company is renting from you. No, you just separated them and then there's no relation whatsoever. You just happen to be a director and the shareholder. But the company is collecting the money. Therefore, the tax should be in you. In fact, you could even find yourself having donation tax implications because you are gifting the money away. I could argue that you should be paying donation tax. Why I'm telling you this? Stop doing things that are not the right thing. Do things the right way. Speak to people who knows these things and then save money, make money. Because had those rentals been in your name, you could be having more affordability, going to banks that consider rental income as part of source of income, therefore your affordability looking more attractive. Then if you want to build portfolio in a company, then you could easily go and say, listen, I'm generating so much of rentals. I'm also earning so much in terms of salary. But however, I want to start buying properties in a company. Just brand new companies, the bank assesses you, you buy the properties in a company, even though it's a new company. You can easily do that because they're just going to assess you. Simple as that. You make cha-ching, right? If you're still overwhelmed and you don't know what to do, please reach out to us. Let's have a conversation. The details are on my profile. Don't be shy. Let's build, let's create wealth, but let's not make certain mistakes that can actually take away our wealth. Let's protect wealth. Let's look after our kids. Consider things like trust, companies, but then make sure that they're compliant. Okay? Good luck.